Nvidia is now the most valuable company on Earth. Market value, $4.9 trillion, surpassing Apple and Microsoft to seize the #1 spot. That number is hard to place into context. It exceeds the GDP of most nations. Not just large, monumental. A story of unprecedented power and market dominance. A global bet that Nvidia is absolutely central to the future of tech. This is the starting point for our analysis. This valuation did not appear overnight. Since the 2024 stock split, shares surged over 67%, adding nearly $2 trillion to market cap, more valuable than Apple and Microsoft. One company now commands unmatched perceived value. Driven by AI's computational demands, the shift is global and profound. From gaming roots to the engine of the AI revolution. With opportunity and risks now in sharp focus for investors, competitors, and governments. To understand Nvidia's valuation, follow the revenue. Fiscal 2026 revenue, $215.9 billion, up 65% year over year. But growth wasn't evenly distributed. The engine is the data center segment, data center versus gaming. Data center, $193 billion. Gaming, $16 billion. About $12 in AI chips for every $1 from gaming. Nearly 90% now comes from data center, fueled by hyperscalers, tech giants, and enterprises racing to deploy AI. Tens of thousands of accelerators for training and inference, immense strength, and concentrated risk. It's a focused bet on the future of AI. Despite its commanding position, Nvidia is not invulnerable. January 2025 sent a tremor through Wall Street, now known as the DeepSeek shock. A relatively unknown challenger unveiled startling efficiency. They claimed training with roughly $6 million of compute, a fraction of the usual cost. The market's reaction was brutal. On January 27th, shares plunged 18%, erasing $589 billion in one day. It proved software efficiency can threaten hardware sales. DeepSeek claimed some models were 27 times cheaper to run. That makes buyers rethink GPU strategies. A smart algorithm can blunt a hardware advantage. One number explains the power: gross margin. In the final quarter of fiscal 2026, GAAP gross margin hit 75%. Revenue minus cost of goods sold equals gross profit. Example, a $40,000 accelerator with a 75% margin. Revenue $40,000 minus cost $10,000 equals gross profit $30,000. Manufacture, package, test. Then fund R&D, marketing, admin, and generate net income. Margins this high suggest monopoly-like power. Operating income, $130.4 billion. Q4 net income, $43 billion. The DeepSeek event revealed a strategic vulnerability. Nvidia's model assumes more complex AI needs more accelerators. Smarter software reduces the hardware required. Breakthroughs can shrink purchase orders. The allure: similar output at a fraction of the cost. Estimates point to roughly $10 billion in annual revenue at risk. A small portion of top line, but a real crack in the armor. If software cuts GPU needs by 50%, the next order gets smaller. Demand for AI is not linearly tied to hardware. So Nvidia must win on software too. CUDA, tools, and stack. Not just the fastest chip, the best end-to-end platform. Counterintuitively, demand accelerated after the shock. No lingering top-line impact. Revenue rose 62% after the event. Explosive growth in AI demand. Benchmark cost fell from $4,500 to $11.64, driven by better hardware and better software, unlocking broader access and new use cases. This is Jevons paradox. Efficiency increases consumption. Cloud growth. Microsoft up 26%, Google up 48%. Usage is dwarfing efficiency gains, for now. So overall, GPU demand keeps climbing massively. So, where does this leave Nvidia? A $4.9 trillion titan with record revenue and towering margins. A 12-to-1 business dominated by data center over gaming. Position: powerful yet exposed. The shock was a warning about software's disruptive force. Algorithmic efficiency can decouple AI growth from hardware growth. Nvidia's path depends on exploding demand versus rising efficiency. For now, demand leads, and Nvidia thrives. Is $4.9 trillion the peak, or a milestone on a longer journey? This is the Deal Insider. Like, share, and subscribe for more finance tips, and watch the numbers.